21st, 2020, and it's almost 10 a.m. in London. We're going to take a look at the markets. So a lot of talk about crude oil. So of course, we're going to start out with that. And then we're going to cover all the other markets like euro dollar, pound dollar, dollar yen, crude oil, gold, and DAX 30, and also the S&P 500. Because we have limited time nowadays because of this coronavirus crisis, you're most welcome to say hello. You might even be able to post a question, but unfortunately I don't have too much time to spend with you guys. But I'm gonna do my best that over the next 10 minutes give you what you need to know what pretty much is moving in the markets. Okay. So let's talk about crude oil, okay? So let's talk about crude oil. So if you're looking at, depending on what kind of broker you have, you might be a bit confused looking at price today, right? So yesterday, this is the daily chart. So yesterday we're trading pretty much here, and I said that if we take this low out or going down here, we're probably gonna trade lower. And we said that because you had a double bottom, we could probably go down to 1019 here, and things moved down and moved down aggressively. And before we know it, we actually reached that 110.19 level. Now, even though the technical analysis suggested to it, I'm actually quite surprised when all the way down to 10.19. In fact, we continue to go lower. Now this chart stopped here at 0, but on the actual market, this actually went negative, which effectively meant that people were paying to get rid of oil to some extent. So why is it like this then? So long story short, when you trade oil, you don't actually hold as a retail trader, you don't actually hold there's not like 10 barrels in a warehouse somewhere with your name on it. That doesn't exist. Rather, we trade on the futures market. So if you buy a contract in the May contract, which is this one here, though, that we were looking at, that declined, then by the end of that contract, if you're still long crude oil, you need to buy crude oil. If you're short, you need to deliver crude oil. So normally this would work out itself perfectly fine, you know, but what happened here is that people that were long didn't have a place to put that oil. And if they did, they just kept it to expiry. They don't care because they bought. So say they bought oil at $10 a barrel, and then they're gonna get that oil, and that oil is gonna get into storage. But the problem is that the storage that is available, there was about I think 30% left availability in the U.S. in Cushing, Oklahoma. Apparently, that space that was available, you have people that have leased that space. And then you have a ton of people that have not leased any space. And these people that have not leased any space, they can't there's no place to store that oil. And it's not that you can just put it in your backyard. Apparently, it's very, very dangerous to have an oil barrel, not because it can, catch fire or explode or something like that you would see in the movies, but rather because apparently there is toxins coming out from the barrel that can literally kill you. So that's why you can't really store it. So what happened here, everybody rushed to the door, everybody wanted to close their positions, and effectively this went negative. So you before had to buy, if you wanted to sell that contract, you had to pay someone to take the oil from you, and that is why we had that slide. Now you might say, why is the price here now then? Because the next futures contract is up here. Spot oil, which is when you actually maybe hold oil, might be down here somewhere, I guess. But the actual futures contract, which is where many hedge funds, but definitely all the retail traders are at, they're already trading at 19.15. So the problem is here, for example, with ETFs. So if you bought an ETF yesterday and you said, okay, I'm going to buy that ETF, because oil was at $10 a barrel. What will happen here is that contract would now expire. So effectively, if you did buy a 10 there, you would have lost money here because it expired worthless. So you lost that 10, and then the ETF, what it does is that it will buy the June contract. Now the biggest ETF in the US already had 60% of its positions in the June contract. I don't know how much they had in May, but I think the fund itself lost 15% or so yesterday. So there's a problem here where people think, and I'm not an expert on all the sort of short-term contracts and so on, but there's a general idea is that there's too much of a gap between the June contract and the May contract, that even if they would meet somewhere in the middle, it would effectively mean that crude oil has much more to decline. And if you look at this chart, yeah, it might look like actually, we're perfectly fine, we just back up at this level, but that's not correct. So the actual contract, the June contract, which is what which people are trading now, you need to click on CL on TradingView, and then you click on June 2020. That's the actual contract. And the contract looks very differently, doesn't it? So this contract is a 19.15, but this contract looks exactly, well, not exactly, but kind of like the May contract did. So yesterday the market was here at 22.82, and we traded below these levels, and we traded lower. We also had this bear channel, and we breached support here, and that breach happened already on April 16. And here the market has a target of this level down here, which is at 1841. So you are dealing with a downtrend in the new contract as well. So it's not the time to buy just yet, because we're dealing with downtrends. My personal view is it's better to wait. And then according to some of these experts that manage millions of dollars, they say the way the curve is shaped right now, there's a likelihood that this is going to look very similar to the situation what happened with May. So maybe we're going to go down to $10 a barrel here again on this one, maybe. So again, why is it like that? Because demand has collapsed and there's too much production, and you need to store it, and you need to put it somewhere, and people don't know where to store it. And that is the challenge right now. So what's the game plan here from a pure trading perspective? Well, the market has already climbed quite a bit today already, so I would not be selling right here unless you want to cover losses and stuff like that. Stop loss orders and stuff like that is more about protecting the account than doing things from the best technical point of view. From a pure technical point of view here, I think my initial idea was to be bearish from 21.22, but given the way this is just sliding, I think we would need to push the sell zone a little bit lower to something like 20.92, and I think we can tighten up the trend defining level. Just leave it at 23.79, so I'm going to be bearish below that level. Let's flip back to the 4 hours. Effectively, we might go up, we might even challenge the whole breakout from this low, but as long as we're below 23.79, this is going to be bearish. And then we'll see what happens. We'll see what happens. Is there there's no other major pattern I can see now. Maybe I'll come back. I'll try to come back to you guys tomorrow and see if there's any other level here than just this one here. But I think realistically, let's just stick with the downtrend for now, and then we'll see how far it goes to the downside. And that is the June contract in West Texas crude oil. Brent crude oil is a bit different, actually. Let's take a look at that one. It's a bit different because the storage issue is handled differently here as well. And this, let's see if I can find, let's actually not delve into the futures contract today on this one. But you can see that we're challenging this low, and it's not looking very healthy here either. So I would be careful here. Look at beyond the long term. I mean, the long term, of course, people are going to use oil. The biggest problem, though, it's not like an equity where you can just buy it cheap and then it will go up a lot over the next 2-3 years. The problem here is you buy it cheap, but then what will happen is that when that contract is going to close every month, and then you need to go into the next contract. And if the next contract is already a higher price, then you have a challenge. So if you want to hold a position for a year, then you effectively need to trade something like maybe the March contract from last year for next year, 2020. And that situation here is a bit different. The crude oil is at 32 here. For the March contract. So then, I mean, technically here as well, even this one just turned bearish. You just breached this channel here. So it might not even be a good idea to buy even for the long term, even if you could buy directly future contracts like the March 2021 one, but that's where you need to sort of get involved to some extent. But as you can see here, crude oil is at 32. It's not at, you know, $10 or $5 as it was yesterday. Okay, let's move along here. Let's talk a bit about the stock markets then. So this is the German DAX, and German DAX, yesterday we said that the market could probably bounce from 10,415. We reached that level at 3 a.m. and now the market reached this level again here at 8 a.m. There's no change to the outlook, and I will continue to be bullish for now as long as trade above. Sorry, I'm terrible. There you go. You've just been seeing my face. You haven't even seen the charts. Okay. All right. So let's go back. Sorry about that. I just wasted 10 minutes of your time. All right. There we go. That is the futures contract. All right. So this is the futures contract in crude oil. The trend is bearish for 1092. Oh, sorry, bearish from 2379. And this is the level where I think people are going to be selling. And we're right now at 19. If you want to find something like the futures contract, just click on CL and then click on June 2020. Okay, and then I also show you the March 2021. I talked about it, and here's that future for that. All right, sorry about that, guys. This is the German DAX, and the idea was just to be bullish from 10,088 and above this level between 10,415 and 10,088. We reached that little buy spot. Might go a little bit lower, but for now the trend is bullish, so there's no change to the outlook. If we take a look at the S&P 500, the S&P 500 went quite deep into the buy zone, but there's no reason to make any changes to it just yet. Crude oil sector is a big sector in the US, and in the past it has weighed strongly on the markets, and a lot of the debt that is issued by crude oil companies, and when they lose money, what happens is that you have a situation where it can influence the rest of the economy, and it will probably influence the rest of the economy. But for now, the trend remains bullish above the April 9 low of 27.04, and I'm just going to be bullish at these levels. Crude oil, gold prices. The idea was just to be bullish between 16.75 and then 16.40, which is this level down here. And the market did indeed go upwards, as I was hoping. Let's see if this can continue. It's too early to reduce the stop for this market. Here's Euro versus the USD. And the market is trading sideways between 107.66 and 109.92. And yeah, so this is, because it's not doing anything right now, I would actually wait for either a move to the upside or a decline to the downside. It might not be what you're looking for, but this is the current situation. What you could do is you can maybe look at things like Canadian dollar pairs, not necessarily dollar CAD, but maybe Canadian dollar against something else, because the Canadian dollar is obviously being influenced by crude oil prices. You might even look at something like the Aussie dollar, but I think Norwegian kroner, Canadian kroner, Russian ruble, those are the currencies that we'll be looking at to see if there's anything happening. Here is the GBP versus the USD, and the GBP versus the USD is bearish right now. Is bearish? Yes, it's bearish right now because now in the early morning it did try below this low here we saw overnight, and I think this one can slowly go lower. One can sell where we are, or you can just look for a little pullback, but I'm just gonna leave it the way it is. It's not a very exciting opportunity because the rest of the currency market is a bit slow, but it's a bearish downtrend below 24.88. Here's the dollar versus the Japanese yen, and the idea has been to sell up here. The alternative is just to take out the lows, and it looks like we're heading towards the lows. You got a double bottom as a minimum. If it could also be considered to be a bit of a head and shoulders with head, left and right shoulder. The double bottom and the head and shoulders have the same pattern to target, and you could even treat it like a descending triangle, and you get a slightly less aggressive target. But they also sort of say that if we do trade below 106.89, then we could potentially reach 105.32, and if not 104.47. Okay guys, I need to leave you now, unfortunately, and I'm going to be back tomorrow around the same time. And sorry so much about the screen, sorry about that, got too excited there. Okay guys, Liz, good morning to you, by the way. Marvin, good morning to you as well. We have Tibor, good morning, and we have Maurizio as well. I hope you guys doing all well, and I hope to see you guys tomorrow when we have hopefully a bit more time. Have a great day guys. Sorry about the screens. Don't forget to like the video, don't forget to leave a comment, especially if you're watching the recording, because it all helps. It doesn't have to be anything necessarily about the markets. You can just say a hello or something like that. That's always nice. Okay, have a great day guys, and I'll see you guys tomorrow. Bye bye.